So KPMG traditionally supports, I know people have that, KPMG is only dealing with multinationals. That's incorrect.
What is the tax trend that you're observing in the market at the moment?
I think the Revenue Authority, so the government through National Treasury and Revenue Authority has really tried to educate taxpayers. So when we talk about widening the tax base, and technology is helping us do that. But I think for me, it's a broader conversation about trust.
Would you define yourself as a leader? And if so, how would you define it? Leadership.
For me, a leader is someone who showcases agility, compassion, and empathy. I would like to believe I'm all those things. I think our challenge is really in the micro level, as you've alluded, and maybe we need to break that down and say what happened. The finance bill's pure aim is for economic stability. Economic stability is achieved through, obviously, revenue mobilization.
Every year, there's going to be a finance bill.
Correct.
So every year, we are going to scrutinize the finance bill. And every year, there's a possibility that we are not going to be satisfied with the finance bill. And so we will be ranting and demonstrating every year.
So, and then the one radical conversation, which I've not seen happen anyway, I could be wrong, would be, why do we need to increase our budget every year? Why? What informs that? But right now, the appetite for spending is there, and revenue is not being mobilized.
I like that appetite word because it gives a very localized context as to
Brought to you by CH Studios, creating content that connects.
Aloha, greetings from the KEPSA Exchange podcast. A lot has happened since we last spoke or since we last had a conversation on this podcast. Arsenal won. Congratulations to every fan. Mmetuonyesha mambo hii weekend. On other news, the global fuel crisis has also hit us pretty hard at home. We will talk about that in this conversation today. And most importantly, how is the economy performing now that we are coming to the end of the first half of the year? That is a check. For those who set goals in the beginning of the year, na mnafikiria bado we have a lot of time. It's only halfway now. We don't have much time left. Finance Bill 2026. We will also converse about this in this episode of the Industry Insight, and I'm joined by Sandeep Main, who's a partner at KPMG, heading private enterprises in Africa. Welcome to the show.
Thank you, Josephine.
Please tell us more about who you are. As someone said, the photographer said, very photogenic. Who is Sandeep we are talking to today?
Yeah, thank you so much, Josephine. So Sandeep is just your average guy, but I'd like to say I'm very ambitious, self-driven, with a lot of purpose in life. And usually when I set my eyes on something, then I will try to get it. So I put in place structures to achieve that particular goal.
And you're also a data guy.
Well, yeah, I could say, you could say I'm a data guy. Yeah.
So, and you'll be helping us a lot into breaking down that data in this conversation.
Correct.
And I know a lot of our viewers will have a lot of questions, so feel free to throw in those questions and comments on the social media comment sections so that we can engage with them, and Sandeep can also help us to break them down. Looking a little deeper into you as a person, in the role that you play as KPMG, and maybe some are wondering, by the way, I tried to remember the full meaning of KPMG, all those 4 names, and I cannot remember any of them. And I think a lot of us just know KPMG as KPMG. But what do you guys do, particularly in your role? What do you do?
So KPMG is a global firm, one of the big 4, focuses on audit, tax, and advisory services. So for me, I'm actually a tax partner. So I've been doing tax for the last 15 or so years, but I didn't just start in tax, right? So I started in a mid-tier firm in audit, and I did audit for about 4 years. And then I transitioned my career into KPMG when I saw there was an opportunity. Who doesn't want to work for a
Who
big four,
doesn't
right?
want?
So I actually pivoted my career back in 2010 and shifted gears from now being an audit person into a tax expert. So I've been doing tax since 2010 and I never looked back. Yeah, so my role primarily at KPMG is that tax is at my core. So I deal with revenue authority, I advise clients on tax structuring, deal structuring as well. And then I picked up this additional role for private enterprise about a couple of years ago, I think about 3. And then I was initially just heading the East Africa market, and then recently appointed to head Africa in about February 2025. So private enterprise really focuses on family businesses, family office. And by the way, family office is different from a family business.
Okay.
And emerging giants. So KPMG traditionally supports, I know people have that KPMG is only dealing with multinationals. That's incorrect. We deal a lot with startups and scale-ups as well. We mentor them, we help them grow in a compliant manner so that they can be the next big thing in and across Africa.
Okay. And we're in the tax period.
Yep.
A lot of you have already started receiving your P9s to remind you that it's time to file your taxes if you already haven't. And for people who are just wondering, for instance, and you said you deal a lot with KRA, one of the institutions that is in all our mouths and minds right now in terms of taxation. What is the tax trend that you're observing in the market at the moment?
I think the Revenue Authority, so the government through National Treasury and Revenue Authority has really tried to educate taxpayers. So I've been doing this for, I told you, over a decade. And every time I go and talk about the finance bill and or the Finance Act and the changes, the one thing that's always constant on any professional's mouth is that we are not doing enough at the informal sector level. So I think with automation, that has been the biggest trend, in my opinion, whereby Revenue Authority are now using data, using insights around automating processes to grow that tax base. So it's not, tax should not just be paid by people who are registered and doing business above board. Everyone who's running a business and is generating income essentially should pay their fair share of tax. And I think automation is what is helping drive that particular conversation. Obviously, on the flip side, the government really needs to mobilize revenue. And in doing so, again, data is used and audits are conducted. I must say that in the past, a couple of years ago, Revenue Authority would write letters to taxpayers and ask for information from here to Timbuktu. But these days, it's data driven. So they already have a sense of what you're doing and whether you've claimed a particular expense and whether it was the right thing to do or not, and then to targeted audits. And I think that is a trend I'm seeing.
Speaking of informal and formal taxation, the conversation that the private sector is driving right now, and we will come down to the finance bill, but it's the fact that there's a small percentage of taxpayers, that is about 20%, that is formal, that is now being actively taxed, while we have an 80% informal that are not ideally paying tax. While some people are arguing that that means it's like you're speaking for a small percentage of higher earners, but I don't think that is the argument here. The argument is, what if we enlarge this tax base so that also that opens up more opportunities for KRA? I don't know what your thoughts are. Which side are you leaning on?
So I'm on the side that says that every business should pay their fair amount of tax. So don't overpay, don't underpay. But you're right. Traditionally, the larger businesses or the formalized businesses, so even you being an employee or running a business, if you have a PIN number, you're already in the formal bracket. But they could be, when we talk about the informal sector, we talk about markets like Komba, for example. They're running businesses worth millions of dollars, not shillings. And the question is, do they pay tax? And obviously the answer is not really. They might be paying import duties at the point of importation of the product, but subsequently, there are many other taxes to consider, like have they paid VAT? Because whatever they sell, whatever is being sold could be vatable. Definitely, are they paying corporation tax? So when we talk about widening the tax base, and technology is helping us do that. But I think for me, it's a broader conversation about trust. So while everyone wants to pay the right fair share of their tax, they're wondering whether they can. There's a major trust deficit, in my opinion, between a taxpayer and the government, because I can give you what amount I should be paying you in tax, but what are you doing with that money? I still don't have access to proper schools or healthcare. It's so difficult, the roads, the infrastructure. So I think that's why people pivot and say, well, you can use all the technology you want to use, but I don't think I'm ready to pay this tax. So there's that trust deficit that I think the government really needs to do more to then build between a taxpayer and themselves. So widening the tax base is being done through electronic invoicing, which we've all seen. And that way, we all come into the loop or purview of a transaction. So that I think is where we are currently. So I think the government is trying to widen the tax base. I guess the way it's being done, it's might be the challenge.
Yeah, very true. I agree with you. And I just picking up from a very short conversation right now, because we will go into. I already picked that you're a leader in your own space. Yeah, you've seen a lot, you've experienced a lot, you've got quite a number of years in the sector, in tax specifically. Would you define yourself as a leader, and if so, how would you define it? Leadership.
I think let me start by definition of a leader and what I do. So I think a leader doesn't micromanage. A leader gives direction and then lets the team or lets the people that they're leading make mistakes or follow direction or even innovate in between. For me, a leader is someone who showcases agility, compassion, and empathy. I would like to believe I'm all those things, but obviously we are human. So sometimes, even a leader can have their, light moments of not very good judgment.
Yeah.
But generally, when we talk about defining leadership, it's all about providing that overall direction and inspiring confidence and trust in the people that you work with, whether it's internal or external. And once I think you achieve that particular ambition of that credibility, then for sure, I can tell you, when you see a leader and you respect that leader and you trust that leader, you would do anything and everything you can to deliver what that leader has requested you to do.
Yeah. Do you believe that leaders are born or they're made?
I don't think leaders are born. I think leaders are made. It's a lot of hard work. You could start on one trajectory today, but then something or a moment in your life might define you to change your current trajectory. So I believe that leaders are made, not really born.
It's
You could have a different opinion, Jocelyn.
Very true. Actually,
Yeah.
not just me, because this is a question that I've been asking the guests in the podcast, and we should probably do a compilation of all the thoughts. And every guest has their own belief in whether leaders are born or they are made. It helps to weigh, where in terms of leadership, because I think this is a conversation, leadership conversation is one of the aspects that really shape the conversations that we have, whether it's in the private sector or in the government. You already spoke about the trust deficit. Our leaders serving the mandate that they were put, or we as citizens put them into the different positions to serve. Are they delivering on their mandate? And I remember my mom told me the other day that when you're praying for the next leader, we need to pray not for a specific individual, but for a leader who has the qualities to deliver
Correct.
on the citizens that they need. Not so long ago, that was in February, 4 months now, I believe. KPMG partnered with KEPSA to do the economic outlook forum.
Correct.
A very interesting engagement, I must say. And one of the things that we are looking at is to, of course, identify the trends and analyze them. That having been the beginning of the year, what we would expect throughout 2026, yeah? Also to just see where private sector leaders, mostly CEOs in the room, were in terms of their optimism. And you made a presentation that really identified very positive outlook for the economy,
Correct.
right? You can give us a brief of that. But before you do that, I would like you to connect, because a majority of the CEOs in the beginning of that forum expressed cautious optimism on the economy. Yes, the macros are looking perfectly good,
Correct.
but there's a big gap into how that is translating into the Wanjiko's pockets, right? So that cautiousness, from where we sit right now, 4 months later, half one gone, what in your belief would you say has happened since then? Were they justified to be cautious, or were those just some unnecessary worries?
So I think the macroeconomic outlook for Kenya is still looking positive, and I would still say cautiously positive. I think our challenge is really in the micro level, as you've alluded, and maybe we need to break that down and say what happened. Remember, the government has its priority sectors as well. So there's healthcare, there's manufacturing, there's agriculture. So while at the infrastructure level or at the macroeconomic level, they look good, because remember, even our GDP is just slightly above the average. Average is meant to be about 5%. I think we're at 6 point something. And the other East African countries are also much higher than the average. So I can't say we are doing too badly from a macroeconomic outlook perspective. But when you look at the micro, when we look at now the Wanjiku that you talked about, why are they still feeling the pinch? Yeah, we're saying, hey, we're doing relatively okay. I think for me, it's really about available cash flow as well. It's about demand of particular product. So again, logistics matter. The fuel crisis that you talked about. So while I can buy the fuel is not available. So the demand and supply is varied. And taxation does play a very critical role as well, because whatever you're earning, whatever you're now making will be taxed. Again, if you're importing, and there are certain now changes in the finance bill as proposed, could impact your cost of production. Again, would that be then affordable to the end user? So for me, I think it's a demand and supply at the micro level, but also availability of cash flow. So that in itself is a disconnect. So I would say our macroeconomic, and if you remember I mentioned, is largely managed by large infrastructure projects.
Yeah.
Is it then filtering in the reality on the ground in terms of how the private sector is actually doing its business? Are they contributing to GDP as we expected?
So apart from, the high cost of doing business, which of course, when we refer to Wanjiko in this conversation, let's apply to both the businesses and the Mwananchi.
Okay.
Because I think the cries are coming from all of us.
Both, yeah.
Right? Businesses are downgrading, whether it's in terms of laying off. Some of them have had to. The struggle is from the feedbacks. The struggle is real, if I may use that word. But most importantly, these are the same Kenyans that we are talking about translating the pockets, and we have seen a lot of sentiment from the public, whether it's the cost of nyanya. Yesterday, I went and fueled with 1,000 to see how far it would get me diesel, my friend. So. What needs to be done? Because Sandeep, let's be honest, this is the same conclusion that we made in the beginning of the year.
Correct.
The macros are performing, the micros are not. Are we going to end 2026 with the same conclusion, or what needs to be done, really?
I think, Josephine, that's a very difficult question, or what can be done. In my personal view, I would think it's all interlinked with the framework of how we do our business. So let's put case in point. When we talked about the issue around fuel, there are wider geopolitics have a major impact. There was not much control in terms of what we're importing and what we have to pay out. But perhaps accountability and transparency would have been one critical area that perhaps could have been considered to the general public to say, look, because I guess the trust deficit I talked about. So maybe it's a perception of an individual or a business that, come on, you must have imported tons of this oil before the war started. Why am I then paying a higher price for old oil that was imported at a cheaper rate? And I'm sure this transparency would have come earlier, but to say that, look, this is what we imported and we have used it. If you remember, in spite of the war, the price did not change. It is only changing now.
Yeah.
And when it is changing now, we have no choice but to have to increase certain elements of of the fuel costs. That could be one. So I think for me, transparency and accountability are very critical conversations to have when you're trying to do better for the business. Even looking at it outside the government, and I look at a business, and we have supported a dime a dozen of these. The one thing I've seen works really well, even when a business is not performing or a business is doing really well, is communication. Yeah, even between an employer and its employee, communication is so critical. If my business is not doing well today, and I know I have given you a bonus maybe last year, but this year I cannot, I'd rather communicate to you well in time and say, look, we're at mid-year and things are not looking good. How do we work together to improve the outlook of the business? Because then we both benefit. If that was an approach, maybe that could be used. That way you now get a buy-in and you get trust of the people that you are working for. The government works for the people. And once you have the buy-in for the people that you're working for, everyone would do their fair share and say, we want to be better, we want to be in a better place. So I think for me, transparency, communication would be overall themes that I can think of that would then help us move to the next level to be better as a nation.
Yeah. Do you feel like there are sectors that are, despite the situation, despite the current economic and the global pressures as well, are actually doing well given the circumstances, and which are they?
From where I see it, I think most, if not all, businesses are struggling, especially if you're in the manufacturing sector, goods related.
Yeah.
Services might not be as impacted as goods are, but remember, they're interlinked. So if you're providing a service to a manufacturing company and they are not doing well, then automatically it's a ripple, it's a value chain and ripple effect anyway. So I think I don't think there's any business that can say hooray. Everyone and every business, I believe, because of the geopolitics and even the current economic condition, would say that they have dipped in their business. But that again is from what I see. There could be some businesses that would say, hey, I think I've even grown. And growth is really relative, right? I could grow in terms of my value, meaning I'm doing less sales, but I've increased my prices. Or I'm doing more turnover and yet I've reduced my prices. So that is a balance that would be dependable.
For SMEs and the smaller businesses, to be specific, for the Kenyan who's working every day to do the small hustle to put food on the table. You've already talked about communication, which may not apply to everyone unless najita kamkutano. If I'm doing my own hustle as an individual. If you were to speak to that Kenyan, to those people, what would you advise them, perhaps, in terms of getting by? And I know, again, from the private sector's collective message right now is that as a country we need to stop taxing for survival and start taxing for growth.
Correct.
This message is reaching also a Kenyan who's already been on survival mode for as long as they can remember. But they need to keep going, because one of our biggest an energy as Kenyans is resilience. Like
Very resilient, true.
we go through, and we make it one way or another. But what would you, if you were to sit across the table with them, what would you tell them?
Oh, Josephine, I think today you're firing very hard questions, but I think for me would be knowledge management. You remember when we had the bill that never went through in 2024, if I recall correctly. It's because somehow or somewhere that particular proposals, all those particular proposals were out in the public domain. Everyone and anyone, even an 80-year-old grandmother, as I understood, was saying, wow, there's something called a tax that I've now been paying. So I think that knowledge management for every individual, you need to take it upon yourself to understand that and I do this a lot for even entrepreneurs, students who, by the way, are running good businesses, but are saying, oh, I didn't know I need to register a business to make money. Am I paying tax? So I think for me, asking those questions to the right people, start something, but start it with the end in mind. How far do you want to grow? You're right. Taxation should not be there for survival. It should be there for growth. Are we there yet? Possibly not. But we can only do that when we are all aware of our obligations. And that happens when, you listen to similar podcasts or, the government, I think, did quite a bit in informing various individuals about what's happening in the finance bills and whatnot. But am I saying there's enough in terms of discussing tax and how it impacts your business? Or generally, how do you grow your business or scale it up? We've got a long way to go. But if any individual is starting a business and they want to really scale up, and I say this from a knowledge perspective, I would not want to just deal with individual to individual forever.
Yeah.
If I'm a plumber, I'm an electrician, or I cater for, making the chapatis on the roadside, I can't keep doing that for the rest of my career or my growth. If I want to make those chapatis for a company to supply to their employees and the company pays me, I would have to be registered as a business. Before I register, and we have done this with some of the taxpayers, whereby they go and tell farmers, we want to continue buying from you. We want to buy this produce from you, but you must give us, for example, ETIMS invoice. When you give us this ETIMS invoice, also understand that you now become within the ambient of the law. Meaning you will get a PIN number, and you'll now, that income that you're generating, you'll have to declare it and pay tax on it. So I think it's a responsibility both ways. You as a person, as an entrepreneur, need to make sure you understand your obligations. And then the people that are now the larger companies that are engaging the micro within the MSME also have an obligation to help them understand. That way you grow together.
From an expert view, should there be a cutoff for the ETIMS?
Jocelyn, that's a very political question. I know a lot of guys are saying there should be a cutoff. Let's cut off based on the VAT threshold. There's a point in time I heard the Revenue Authority was saying that they want to even remove the VAT threshold. I've not seen it in the finance bill. The idea would be to increase it, not to remove it in totality because of administrative issues. But I believe that with electronic, and this is my personal opinion, with e-invoicing, it brings everyone within the ambient of the law. It is a good thing because that way we all pay our fair share of tax. I'm not saying I know a lot of people are against it, but let me be clear. My position is that if you are to grow as a country, if you are to grow the tax collections of this country, businesses are doing millions of shillings or millions of dollars and yet not paying a single coin of tax. With electronic invoicing, we all come into the same ambient. If I made a supply to you, it becomes a sale to me, it becomes an input for you. You claim it and I tax it after net of my expenses. So I think automation and data is important. It is the only way we shall move to the next phase of our life whereby taxation becomes for growth, not for survival. Yeah.
Okay. I wonder what you think. Maybe you can share your feedback on that particular question via the comment section. And you did mention about the outcome of the Finance Bill 2024. that was then dropped. Then we came to 2025. It was relatively calm. But now we are in 2026. The conversation is again happening as public participation is underway at the moment. Private sector itself did submit its compiled or recommendations and position as well on the 25th of May. Part of that being, of course, the issues of pay, the issues of KRA, getting hold of accounts while the conversations are still going on with the owners regarding their status. Yeah, so a lot of that is happening. From where you sit, I don't know what you think the current bill is. Is there an improvement? What do you see has worked so far, and what are some of the issues that you feel still need to be addressed?
So let me start with the positives that, or the one clear positive that I saw, two maybe, and that came through these particular proposals, not yet law. One is obviously around the amnesty, whereby the government or the revenue authorities, the government is proposing to now extend the tax amnesty to December 2025. Which is a good thing because there could be a lot of system issues, human error issues, and you have an opportunity now to get a waiver after paying the principal, if any, on the interest and penalties, which can really amount to a significant number. The other good thing that I came across was really around the water, the removal of the excess duty on the water bottles. I thought that was a great thing to have because water is not a luxury. Excess duty traditionally is a sin tax. But we have seen instances where it's just finding its way through many other items or goods. On the flip side, and I must say, the entire conversation of a finance bill, remember, I think we need to raise about 117 billion from this particular budget cycle. The flip side, and really this is judgment, and the intention should always be to work in collaboration with the private sector. Obviously, there are a number of changes. Well, there might be very few new taxes. Like the one I saw was it on paper or plastics, 10% excess duty. Then there's a lot of reclassification. So whereby you're previously zero rated, now you're being moved to exempt. And the impact there means, exemption means you cannot claim that input VAT. What happens? It's a natural thing. If that goes through, naturally the ultimate cost of production is going to be higher. The end product is going to be more expensive to the public, so to the end user and consumer. There are a lot of those, Josephine, a lot of increases, and then obviously some unrealistic elements whereby, and again, I think there's a lot of ambiguity in the wording of some of the provisions in the current proposals. Things like, if you are a nil tax liability, you need to file your return within 1 month.
How does that translate?
That translates to you as an individual. Initially, my thinking was maybe the idea is that if you are a nil filer, meaning no income, no expenses, 1 month, doable. 2nd of January or 1st of January, you log in. There's an element in iTax that says file nil return, and you're done within seconds. When you say nil tax liability, as worded, means that you could be a big manufacturing business, but you're in losses, meaning you have not paid a single shilling or a coin in taxes. You become a nil tax liability. Is it remotely possible for a business that's doing sales in billions, but yet because of the investments they have made, they're in a tax loss position, suddenly to now file a return within a month? Remotely not possible.
So does that clause make that possible?
That clause is actually stating exactly that. If you have a nil tax liability, you file your return within a month after the end of your financial year. And that could be a terrible...
big mistake.
Yeah.
Oh, yeah. So do you believe if done right, the Finance Bill 2026, with all the recommendations that have been made, could actually strike a proper balance between, raising revenue to meet our budgetary, requirements as a country, but also making sure that Kenyans feel some sort of relief from the strain that has been on this since actually the beginning of 1-2 years back, if we're being honest.
So I think the budget cycles or the finance bill's pure aim is for economic stability. Economic stability is achieved through obviously revenue mobilization, but the two critical things for me is for the bill to remain competitive, so it doesn't give a competitive disadvantage to our high growth or our priority sectors like manufacturing, agriculture, healthcare, and it should be stable and predictable. Remember, by the way, Josephine, we have a national tax policy. I've been doing tax for those almost 2 decades, and the national tax policy came into force in 2023, if I recall. And before that, every year we were having a discussion and say, we need a national tax policy. What does a tax policy do? It brings stability and predictability, which means I would say a certain rate should not change for 5 years.
Yeah.
And case in point, if you look at the current proposals in the finance bill, we have one where it talks about bad debts, provision for bad debt recovery, VAT on that. In 2025, it was reduced from 3 years to 2 years. Before that, it was 3 years in 2024. And now there's a proposal to take it back to 3 years, meaning a business must wait for 3 years before they lodge a refund. Currently, it's 2 years. So I ask you, why are we flipping every 1 year? So that predictability is so critical. Today you say, I'm exempting you, this particular products are 0 rated. And then suddenly the following year, it's now vatable or exempt. Predictability, competitiveness would be so critical in order to then get that fine balance. And I'm not saying it's impossible. It is possible. But with dialogue, and even the private sector must feel like perhaps they have been listened to or heard on, and there has to be a compromise here and there for us to grow.
I'm happy that you brought the issue of stability and predictability in the conversation, because I was going to ask, and it worries me as an individual, because I don't think we appreciate how short a year is these days. 12 months. It's, and I think a lot is now happening that before you know it, a month has gone. Before you know it, 12 months have gone. My biggest concern right now is this, and maybe digital literacy and availability of information has also made this possible, because like you mentioned before, we all now know, from the young kids, as long as you have access to information, to the older generation, we now know that these things are there. Unlike before, when we were not involved at all. And that's why you're seeing people, the public giving their feedback, their opinions via social media, and even going to the streets, to be honest. So every year there's going to be a finance bill.
Correct.
So every year we are going to scrutinize the finance bill, and every year there's a possibility that we are not going to be satisfied with the finance bill, and so we will be ranting and demonstrating every year.
But mind you, the national tax policy talks about a 5-year and Rwanda does it really well, I must say. So if we agree on certain provisions today, remember, a policy is not law.
Yeah.
It's nice to have. Nice to have policy. But can we implement that policy through our legislation? That would be the critical connection between the two. So you're right. Currently, unless we now implement the national tax policy, then we will be having these debates year on year. But if we then get and say, look, let's make this more predictable for investors, whether foreign or even local, that you're going to get certain exemptions or certain benefits for the next, or certain taxes that you need to pay, it is cast in stone for the next 5 years. And yes, could be subject to review or change in between.
And then we only keep few necessary, clauses that can be then changed every now and then. But I do agree with you because my friend, yeah. It's like you close your eyes, you open them, we are back to the same place. You close them again, and then you don't know what's going to happen this year. You don't know what's going to happen next year. You don't know what's going to be introduced or removed in the next year. We completely do need that sort of and level of stability if businesses are to thrive, if investments are to be sustainable, and if we are to remain globally competitive in economy. And I'm just wondering, and good you have referenced also the policy, and you've also mentioned Rwanda as an example. But as a KPMG partner, you work with economies both in the East African region, Africa region as a continent as well, but also internationally. From everything that Kenya has experienced in the last couple of years, in comparison to what maybe other countries have gone ahead of us and have experienced the same, and they have sort of found a ground to set themselves on. What are some of those examples?
I think, Josephine, essentially it all boils down to your fiscal budgets and deficits. And I must say, most, if not all, countries locally and globally, well, locally I mean within the region, and globally do have that fiscal deficit, meaning they need to bridge a gap between their budget and what they've raised through revenue mobilization. Lessons that I can see that happen in different jurisdictions is a proactive approach to reducing the budget. How do I reduce the recurrent elements? How do I manage my recurrent expenditure? Whatever those could be, for every country they're different, but there are some that cut across. How do I tell my ministers that you do not need to take these additional perks? Let's reduce those, or let's limit them, because we need to build a base to either repay our loans or to bridge our deficit, our gap. So, and then the one radical conversation, which I've not seen happen anyway, I could be wrong, would be, why do we need to increase our budget every year? Why? What informs that? Why must I keep increasing my costs? If I cannot raise that revenue, why can't I? And there's a saying in my culture is that I will only go as far as my bed sheet is, or my cloth is. I will not go beyond.
Maybe we are a spendthrift country.
Which is rare. I have not seen that. But maybe those are some of the mindset shifts that we would probably want to see from leadership, is that can I manage with what I'm collecting? And yes, well, I might have a gap immediately. Must I continuously increase my appetite for spending? If you manage that appetite for spending, you manage your revenue mobilization in tandem with that. But right now, the appetite of spending is there, and revenue is not being mobilized.
I like that appetite word, because it gives a very localized context, and as to we can relate. We can relate, and then, like I mentioned in the beginning, time has really gone by super fast. Just the other day, we were starting the year blowing fireworks in the sky, celebrating the end of 2025 and the beginning of a new year. It's gonna be happening very soon. But perhaps now that the first half is coming to an end, as it has, and as we start the next financial year with the second half of 2026, perhaps there are trends that you have observed from a KPMG perspective that we can look out for, and especially from a business perspective, that would then help businesses to remain afloat and to make it through another year, and then perhaps when we have the next economic outlook forum, we will tell a different story.
Correct.
Maybe.
I think for me, I'm going to start by advising, which is what I do best. I think businesses need to look inwardly. and see, do they have the right corporate structures? Do they have the right governance structures? What is their level of tax compliance as well? Once you do that, Josephine, once you look internally and say, look, I think I need to manage one or two or three risks, and that would help you. Remember, it's not about just sustainability into the next financial year. I'm looking at businesses scale. There are a lot of investors, local investors as well as foreign investors, who are willing to take a stake in a private business, but there's certain things and certain criteria that they would look at your governance structures. If you're a family-owned business, and I'm just giving a loose example, are you 20 of you, all 20 of you, maybe 3 generations, are all of you involved in the business, or do you have some sort of an independent CEO, independent CFO, an independent board that then adds value to your businesses for growth? So that's one, inward looking. And secondly, obviously, is knowledge management. It is so important that, and I was speaking to someone who said that they're subscribed to, I don't know, 5 or 6 different AI tools. And when they have a question, and they pay for them, they ask a question to one, they ask the same question to the other, getting information, just ensuring that whatever they're doing, and eventually they take that information and share it with the consultant and say, what are your thoughts on this? But that proactiveness is so important. Just to ensure that you're on top of any emerging trend, any new matter, so that you can quickly mitigate, not react. Do not react. Mitigate ahead of the reaction. And again, the final thing would be a cultural and a mindset change. Can we be more proactive rather than reactive? Do I need to wait for Revenue Authority to come knocking on my door? And they will, because they too have only about 6 months or so within which they need to meet their target. So likely they'll come knocking. Can I prepare? And the amnesty, if goes through, would be a great opportunity. So businesses now need to be more proactive and say, look, let me start preparing my affairs. Let me see where maybe there are compliance gaps with their consultant. It could be KPMG or any other. And assess and see, do I have a gap? Can I do better? Do I need to now take advantage of this amnesty before it crystallizes into a full liability?
And what role do partnerships play in this case?
Critical, Josephine. Partnerships are critical. I think you need to work together in a more collaborative manner in order to then scale and remain sustainable.
Particularly from a KEPSA perspective and KPMG perspective, some of the opportunities that you could actually, speaking to some of your business partners,
Correct.
identify for them to take advantage of?
I think for me, like now, from a KEPSA or KPMG perspective, such a conversation is critical. It's part of a partnership. And for your members and our clients as well, when they get this knowledge and they get a better sense of what's going on in the environment, helps them then plan their business in a more sustainable manner. Again, partnerships come through knowledge management as well. There are courses that I guess you offer as well, or partnerships that you then bring different experts to talk to different sectors. That in itself, remember, the element of now working in silos is long behind. You must work collaboratively if you're to survive, not even thrive. Or let me change that and say you must work collaboratively to thrive, not just to survive.
Very true. And like I mentioned, we're in the tax period, and it is our citizenry duty and obligation to file taxes. And as tax experts, please share one message with our audience on, a call to action for this period for tax filing.
So I'd encourage everyone to then review their matters. It is June. Few days to June. And by 30th of June, you would have required to have filed your individual and business returns if you're a December year end. And I think for me would be, don't wait till 29th or 30th of June. Infrastructure and systems do tend to have an issue of failing. So let's not wait. Do it, and do it now. That's what I would say.
Thank you very much. You have heard it from Sandeep Main, Main, who is alisema kwanza is just Maina without the A at the end, on all matters finance bill, on all matters economic performance and taxation in the country. I do hope that you have picked a thing or two from this conversation, but if you still have specific questions that you would want them answered, we will still remain in collaboration with Sandeep and KPMG, and we can also assist you in bringing those issues to light. This is not the last conversation that we are going to have on the finance bill. We will have several other guests who are going to help us shed light on this topic, even as we try and put 1 + 1 together, and hopefully we have a better year ahead, or second half of the year ahead. I've been your host, Josephine Wawira. This has been an industry insight conversation on the KEPSA Exchange podcast, happily in partnership with the CH Studios here in Westlands. Until next time, ciao.
Brought to you by CH Studios, creating content that connects.